Hello and welcome to our webinar. Today on key dates and deadlines, we're going to talk about contributions and what you should know as we approach the end of the year. My name is Larissa Greene and I'm with Advanta IRA. And before we get started, I just wanted to let everybody know that the slides are included as a handout. So if you just look at your navigation bar for GoToWebinar, you're going to see handouts on there. You open up that box and you'll see key dates and deadlines as a PDF, so you can download that and save it or take notes if you would like and follow along. We will also take questions throughout the webinar, so please feel free to type them into the question box as we go, and I will address them as we go through the slides today. As I said, my name is Larissa Greene. I've been with Advanta for a little over 11 years now, and I've been teaching classes and doing networking for about 9 of those 11 years. And before that, I was assisting with accounting. I did check coding and receipt of income for IRA accounts. I did some transactions, new accounts, and all of the various things that go into self-directed IRAs. So I'm very familiar with the process. And as I said, I've been teaching classes for about 9 years now, so I've really enjoyed my time here with Advanta. If you have any specific questions for me, instead of asking during the webinar, you are certainly welcome to reach out to me. My contact information is listed on this slide, and I will also provide it again at the end of the webinar. A little bit about Advanta. We've been in business almost 20 years now. It's actually going to be 20 years in February, so we're just around the corner. And we are a self-directed IRA administrator, which means we hold qualified plans for people that want to invest outside of the market. So the IRS does allow a diversified group of assets in your retirement account. I think when we normally think of a retirement account, we think of stocks, bonds, and mutual funds, but the truth is the IRS has always allowed alternative investments in an IRA, and so that's what we do, and we've always done that. So we hold the account, our clients are finding the investment, and we're helping them get that done in the name of the IRA. We don't actually sell anything at all. We just act as record keepers for retirement accounts that want to hold what we consider private investments. And the list for private investments does go on, and we're not going to talk about that today during this webinar, but you certainly could go to our YouTube channel or video library and check out any number of webinars that we have done on the different asset classes allowed in an IRA. So that could be anything from real estate to cryptocurrency. We have people invested in gold and silver bars and coins, and current foreign currency exchange, and again, the list goes on and on. If you're interested in learning more about that, I definitely would suggest checking out our video library. You can also email me, and I'd be happy to email you webinars on topics you're interested in. We have $2 billion in assets under management, and we have clients nationwide and some even worldwide. So as long as you have a US-based retirement account, you can self-direct it, and we can assist you with that. And we have clients invested in the US and also outside of the US. So again, as long as it's allowed within IRS rules, we can certainly help you with that. And something that we do a little bit differently than our competitors is just very simply that we provide every account holder with a dedicated account manager, someone who is there to assist them. They do receive that person's extension and their email address, and that person is assisting them with everything from contributions all the way through to every investment they will make with that account. Even though we do talk about the IRS rules and what you can and can't do within an IRA, also today, for example, we'll be talking about IRS deadlines. Something that we do not do is provide investment tax or legal advice, and we don't endorse any products or sell anything at all. And so if you have questions regarding any of these items, you are certainly welcome to ask. And if it does fall under something that we can't assist you with, then we certainly could possibly refer you to a professional, maybe a CPA or an attorney who can answer those questions for you. If you're just joining the webinar, I just wanted to reiterate that I will be taking questions throughout the webinar, so please feel free to type them into the chat box. So self-directed plans, and what we're going to be talking about today again is deadlines, contributions, and just key dates that you should be aware of as we near the end of the year. And so we're going to talk about the different types of plans, really just in during the fact that we'll be talking about contributions and those deadlines. So each of these plans may have a different contribution deadline and something that you should be aware of. So traditional and Roth IRAs, those are going to be the most typical or most common types of accounts that we hold, but we also do hold employer-based plans, SEP, Simples, and 401ks or solo 401ks. And then we can also assist with former employers plans. Those are typically going to be rolled to traditional or Roth IRAs, or if you're self-employed, again, they could go to a SEP plan or a solo 401k or even a Simple. So you have a lot of options there, and so that is what we're going to talk about today. So here are the plan contributions. So again, important information for you to know as we get to the end of the year. If you have not made your contribution yet and you are planning on it, we have the contribution amounts listed here for you for 2022. Some of the accounts do change every year, so those are going to be the employer-based plans and typically health savings accounts as well. Those usually go up a little bit every year. They adjust for inflation. Traditional and Roth IRA, they do go up, but I haven't seen them change in a few years at this point. And then education savings accounts, I have never seen the contribution amount for those change. But so just so you're aware, traditional and Roth IRA contributions for 2022 are going to be $6,000, $7,000 if you're over the age of 50. A few of these plans do have what they call a catch-up contribution for individuals over the age of 50. So again, $6,000 for traditional or Roth IRAs and $7,000 if you're over the age of 50. When you're making those contributions, if you have both a traditional and a Roth IRA, $6,000 is per person, not per account. So that's very important when you're making that contribution. If you wanted to split it up between your traditional and Roth, maybe have some tax advantage on a deduction, but then also have the advantage of it growing tax-free in a Roth, you certainly could do that, but it would be divided among those accounts. It is not a contribution per account. So just take note of that. The next on the list here is a SEP IRA or Simplified Employee Pension, and those are for self-employed individuals. For 2022, the contribution limit is $61,000 or 25% of your compensation, and it is up to that amount. So where does that variation come in? Well, it is 20 to 25% depending on how you and your business file. So it could be up to 25%, but it is going to depend on how you file. So it might be the lower end of that as well. And it's either 61,000 or up to 25%, the lesser of the two. So if you had 100,000 in earnings this year and you did qualify for the max of 25%, then 25,000 would be the max amount you could put into the SEP IRA. A simple IRA is 14,000. There is a catch-up limit on this one of 3,000. So if you're over the age of 50, you get another 3,000 into that account. That is the employee contribution. The employer contribution is going to be up to 3%. I'll talk a little bit about that when we break down each of these accounts. The solo 401k for 2022 is $20,500. It also does have a catch-up, so it gets another $6,500 if you're over the age of 50. This is salary deferral, or this is the employee contribution. The employer gets another up to 25%. Again, that's going to be 20 to 25% depending on how you and your business file, up to a grand total of $61,000 or $67,500 if you're over the age of 50. The education savings account or covered L account, as we also refer to them as, is $2,000 per year per child. And then the health savings account, $36.50 for the individual with a catch up of $1,000 if you're over the age of 50, and then $7,300 for a family contribution. I just had a question pop up, so I'm going to just take a look at it real quick and get that answered. So the question is, I just did a rollover from another traditional IRA. Can I take some of the funds from that rollover to purchase real estate to diversify my portfolio? The answer is yes. You're basically going to establish a self-directed traditional IRA with us, and then you can certainly do a transfer of funds to move over the amount you would like to self-direct. So that is definitely an option for you. You can always reach out to me, or if you're already speaking with somebody at Advanta, reach out to them and find out how to get that process started and how it works. But we certainly could assist you with that. So now we're going to look at the deadlines for each and kind of go over when you need to be making those contributions. And that's going to be important because as you'll see as we go through these, they're all a little bit different. And so just be aware of what those deadlines are if you have plans for these types of accounts. If you don't already have the plans established, we're going to talk about that as well. So for traditional and Roth IRAs, these are treated the same as far as tax deadlines go. So either your deadline for making the contribution is going to be April 15th of 2023. So we're going into tax day into the following year for a previous year contribution is what they call that. Now, just so that everybody is aware, April 15th of 2023 is going to be a Saturday. Typically, they are going to move that tax day deadline to the following Tuesday, but we do not have confirmation on that yet. So for right now, for purposes of this webinar, we're going to say that tax day is going to be April 15th, which is going to be your deadline for contributing to a traditional or Roth IRA. And what that means for you, that if you already hold an account of traditional or Roth IRAs, that you simply want to get your contribution to Advanta or to your IRA holder by that date, or you can also make sure that you mail a check and it is postmarked by that date. Now, what I would recommend is looking at making your contribution sooner than the postmark by date, because checks do get lost in the mail, things happen, and if that does happen, we cannot count your contribution if it is not postmarked. So if it gets lost in the mail, we never receive it, there's no way to go back and say, well, I had put it in the mail. It just doesn't work that way. So, just making sure that you're not waiting till the very last minute to get your contributions over for your IRAs. Now, if you don't have an existing traditional or Roth IRA, it's not too late. You can open that account. And again, you can open that account and fund it all the way up until tax filing. Something that does not change for traditional and Roth IRAs are extensions. So even if you file an extension, you do not get to extend when you can make the contribution. So the contribution has to be made by tax filing for 2023. It does not include extensions. So your tax filing date is going to be April 15th, 2023. Even if you file extensions, you have to make your contribution by that date. And you would also have to open the account by that date if you do not have an existing Roth or traditional that you would like to contribute to. So SEP IRAs are going to be a little bit different. These are considered employer-based plans, and they're great accounts if you're self-employed. So if you're self-employed, or if you are a W-2 employee, but you have self-employment income, you can have a SEP IRA and make contributions to it. As we talked about, the contribution limit is $61,000 or up to 25% of your compensation. It is going to depend, again, how you file. Now, what you should be aware of for this type of account is you can actually open and fund this account all the way up until October 15th of 2023 for 2022. So this is your contribution deadline for 2022, goes all the way up until October 15th of 2023. So that's noted here. And so you can still open that account into next year. You can open it all the way up until that tax filing. So if you do tax filing plus extensions and you extend all the way to October 15th, then as your own employer, you can actually still open and fund that account. The simple IRA is going to be a little bit different and unique compared to our other employer-based plans. A simple, again, the employee contribution is $14,000 or it can be $17,000 if you're over the age of 50, plus up to 3%. So it's a 1 to 3% employer match. That has to be opened by October 1st of the current year to make a current year contribution. So if you want to make a 2022 contribution, you had to have established this plan by October 1st. That's very important because when we go into next year and you're looking at tax planning still for the previous year, sometimes people will say, well, I want to open a simple for last year, and that will not be possible. So it has to be done already. If you're making a 2022 contribution, you already have to have this account established. But the good news is if you already do have it established, then you can make employee contributions up till January 31st of 2023. And you can make your employer contributions with tax filing plus extensions all the way up to October 15th of 2023 for the previous year. So again, talking about the previous year, going into next year all the way up to October 15th, 2023 if you filed extensions. But the plan did have to be established by October 1st of 2022. With a solo 401k, again, it has some unique dates and deadlines to be aware of. The contribution limit again is $20,500 plus another $6,500 if you're over the age of 50 for salary deferral, or we also call that an employee contribution. Then you get 20 to 25% employer match up to, and the total combined can be up to $61,000 or $67,500 if you're over the age of 50. Your plan can be established all the way up to tax filing plus extensions into the next year. However, if you plan on making an employee contribution, it really should be opened by December 31st. So as of 2020, they did change that you could still open the plan into the following year for the previous year. However, your employee contribution should only be made up until the final paycheck for the previous year going into January. And so really your plan should be established by December 31st if you plan on making an employee contribution. If you're only making an employer contribution, then you certainly could open the plan and make an employer contribution all the way up to your tax filing deadline plus extensions into 2023, which would bring you up to October 15th, 2023 for the previous year. If anybody has any questions on that, please feel free to reach out to me and we can discuss your specific scenario. But that is really sort of the way that it works. If you think about something like salary deferral, where you're getting a paycheck, typically you're going to get the final paycheck of the year at some point in January, and that's when your final employee contribution should be made. So and continuing on with 401ks, again, they kind of changed the rules for 401ks as of 2020 where you can still establish them. But again, if you're looking at making an employee contribution, you should talk to your CPA about calculating your employee contribution and finding out how quickly you need to get the plan set up if it's not already established. So for education savings accounts, or ESAs, or sometimes they're also called CISAs, they can be opened and contributed to up to tax filing. This does not include extensions, so just like a Roth or a traditional IRA, this account needs to be established and contributed to by April 15th of 2023. So you have until April 15th to make previous year or 2022 contributions to this account. The annual contribution is $2,000 per year per child. And you can establish that and make that contribution with us, and we're certainly happy to help you with that. For health savings accounts, they also have unique deadlines and things that you should be aware of when establishing and contributing to the health savings account. Again, for an individual, so again, this is going to be based on how you're insured. So if it's just a policy for you as the individual, then you can put $36.50 into the account. You get $1,000 catch up if you're over the age of 50. If it is a family plan, so a family health insurance plan, then you can have a family HSA and you can contribute $7,300. The tax filing for or the contribution date is tax filing, so April 15th. Again, even if you extend, so if you file extensions, you still have to open and contribute by April 15th of 2023. And again, if that gets extended, it would be extended to April 18th of 2023. The HSA can be funded for the previous year all the way up till tax filing. The application for a new account can be submitted or postmarked with the contribution by the state. So this is the interesting thing to be aware of. You must have a qualifying health care plan by December 1st of 2022 and maintain it for the following 12 months in order to make and keep the entire contribution. So just be aware of that. I know we're sort of coming up to a time where you can shop your plan and look for something during open enrollment. And so if you're planning on doing that, just make sure that you have that qualifying healthcare coverage by December 1st. and plan on maintaining it for the full 12 months preceding it in order to make and keep the entire contribution. If at some point you drop that plan, if you've made the full contribution, then you're going to be looking at removing a portion of that contribution depending on when you lost the plan. Oops, sorry about that. So if you have an existing plan, then you simply make your contribution all the way up until April 15th of 2023. And again, there are no exceptions for bounce checks or checks lost in the mail, wires not received, ACH is not received on time. So just make sure you're aware of that, guys. It does happen, unfortunately, every year where a check gets lost in the mail or an ACH isn't received on time or a wire is not received. So just make sure that if you're planning on waiting to make that contribution, don't wait until the week of, because that is usually when everything gets chaotic and things happen and checks get lost in the mail. So just make sure that you're looking at whether or not you're going to make those contributions and plan for them. So the next deadline that we want to talk about, Roth conversions. And a lot of times people will come to us when they're getting ready to file their taxes. It's all the way up until April 15th. And they say, well, I'm going to file my taxes this year. And I realized that I had some losses. So this would be the year to do a Roth conversion. And unfortunately, a Roth conversion has to be done in the tax year you are planning on paying the taxes. So meaning that the Roth conversion has to be done by December 31st of 2022 if you plan on doing it. You can't come to us in January and say, hey, I just did calculations and I'd like to do a 2022 Roth conversion so that I get a 1099 for 2022 to pay the taxes. It just simply doesn't work that way. So you just want to make sure that if you're going to do a Roth conversion or if you're thinking about it, getting with your CPA or your tax advisor prior to the end of the year and making that decision prior to the end of the year in order to actually get it done. And it's really just filling out some paperwork and pulling the trigger on it would be fine, but making sure that you're consulting your CPA or tax advisor before coming to us and saying, hey, I want to get this done, and then planning on having it done before December 31st. That's very important. So if you did a conversion, let's say today, then you would receive a 1099 at the end of the year to pay the taxes for that amount. And for those of you on the webinar that are not aware, doing a Roth conversion simply means taking a pre-tax retirement account and moving it to an after-tax account so that it grows from that point on tax-free. And for that money to be 100% tax-free at retirement, it has to age for 5 years. And so even if you have an existing Roth, if you're adding money to it by way of a conversion from a traditional IRA, that amount converted has its own 5-year aging. So in case you weren't aware of that, it does have its own 5-year aging. And it starts the year that you do the conversion. So if I convert $100,000 this year to my existing Roth IRA, then that $100,000 and its earnings are going to have to age 5 years, and I must reach age 59 and a half for that amount and the entire account to be completely tax-free. So just so that everybody is aware in case you did not, or if you're not familiar with the term Roth conversion. So that's really all that I have today for key dates and deadlines. I'll give everybody a chance to put any questions into the chat box. Here's my contact information again in case anybody has any questions for me. And I'd be happy to speak with you one-on-one. If you have some things that you're working on, we can look at that and go over what you should be aware of. Again, my name is Larissa Greene. I'm with Advanta IRA. Thank you everybody for joining me today. At this time, I don't see any additional questions, so I'm going to end the webinar. Please make sure to reach out, and we look forward to having you join us on our next event.